know in cash because they would have physical. If it's a bank, you'll get a statement. If it's cash, it's your petty cash. But then we have something which is called BRS, which is Bank Reconciliation Statement. And the reason why you have to prepare this is because if it's cash, petty cash in your hand, there is no ambiguity. Whatever amount you have, you take a cash count and that figure comes on the 31st December balance sheet. But the problem is in bank, there are some timing differences. Why? Because you may have released some check and those checks may not have been in cash by the bank and the difference may be a couple of days, right? Similarly, there may be some direct deposits by the bank, but the bank will release its statement only after 31st of December. So maybe you have not incorporated some of the required changes in the bank. So typically, how would the audit of a bank account? So let's say you go to asset side and you look at the bank account. What is that figure that you see in the bank account? Do you think it is going to match your bank statement completely? Yes, no? Do you think it's going to match your bank statement completely? I look at 31st December balance sheet figure and I look at 31st December bank statement. Do you think they're going to match completely? Yes, no. What do you say? They won't. And why would they not? Because there may be some genuine timing differences where you would have given the cash, but the bank would not have recorded it. So what we generally do as a common practice is we get the statement after 31st and then we take your, so typically in the balance sheet, the figure that comes is as per your records. The balance sheet, the figure that comes is as per your records. But as an auditor, when I go and want to check the balance as per the banks, I will also check something which is your bank account. So I'll take a ledger dump or the scrutiny of your bank account. And I will also take the BRS because a bank reconciliation statement will tell you what are those changes that have to be made in the books in order to tally it with the bank. And as an auditor, I would probably take the bank statement for the next year, which may be a couple of days, maybe 15 days after the close of the year. So 10th till 10th of January, year 2, I will take the bank statement and then I will see whether all of those items written in my reconciliation is actually matching up with the bank or not. If everything matches up, I know that I'm correct. So typically the figure that goes to my balance sheet is as per my records. But those records have to be substantiated via a bank reconciliation statement. And as an auditor, I'll have to see that the records as per books plus BRS entries should be able to give me the bank figure as at 31st December, year 1, whichever year you are tallying. So the question becomes, how do you reconcile? Now, this is a topic that I think most of us have done at some point of our career, maybe as a part of school student, college student. So I started accounting when I was in class 8. I think I've done this way before class 10. People who started it in their plus 2 in India, they would have done it in 11, 12. People who started it in graduation, they must have done it in graduation. Now, see, this looks like a really easy topic, right? And most of us know that there's not much that may go wrong here. But see, the only complexity that you can have is, now there are 2 ways of looking at a BRS. One is they'll give you a BRS. The other is, and they'll ask you to please construct the BRS. Now the problem is, first, they'll give you the source documents. They're not going to give you the data, which you can easily put in. They'll give you the source documents. They'll give you the bank statement. They'll give you the cash journal. They'll give you the cash disbursement journal, cash receipts journal, and then you have to pick up the data yourself. That's the biggest complexity because typically you will have to have some working experience of working out the BRS. The second thing is if they give you something called a reconciliation. What is a reconciliation? Now they'll tell you, see, these accounts, this is what our book says. I'll give you all the base data and then I'll ask you, please pass the adjusting journal entries. Please pass the adjusting journal entries to reconcile cash. Now, this may be a little tricky, guys, okay? Because again, remember, this is a very easy topic. So if the topic is easy, the questions can be really difficult to answer. So that's the reason I want you to be a little careful about these topics, okay? Let's take a sum here. And through that sum, we'll first just establish the concept. But after that, we are going to do two very good sims in our class. I'm pretty sure if you're able to crack those two sims, you can handle anything in cash that can come your way. Okay? So look at this question. There is a company whose records reflect a 15,500 cash balance as at the end of the year. The company's bank statement reports the following. There are some deposits in transit and there are some outstanding checks. You're supposed to give me the adjusted cash balance. So typically what we will do, we will make the changes that should happen in the books. Should make the changes that would happen in the bank. Ultimately, both of those would reconcile and amount to one figure only. So let's say if I start with the cash, okay? Let's say I start with our books. And then I start with bank books. Okay? So when I start with our books, what is the balance that we have in our books and how should we be reconciling them? So when we look at our books, I start with the beginning balance. Before the reconciliation becomes 15,500. And what are the changes I'll make here? What are the changes that I'll make here? Anybody? So I have already given effect to outstanding checks and this is the bank balance. This is the bank statement figure. So I'm not going to take this into consideration. But these are the two figures which I have not affected in my books. Why? Because I received the bank statement after 31st December. So typically speaking, this 15,500 already includes 4,500 and already includes 2,000. But it does not include the two figures which the bank notified us late. So what will we do? Now we know that actually a bank account, I should have passed this entry in my books. So what entry will I pass in my books, guys, if I have to give effect to this? What entry will I pass in my books if I have to give effect to this? Can anybody tell me? I know these have not been accounted for in my books. What entry will I pass? So typically some kind of a miscellaneous cost account debit and I'll credit my bank account. Okay, and I'll credit my bank account. So what will I do? I'll reduce the bank charges. And typically NSF is a full form, is an acronym for non-sufficient funds. What will be the entry for NSF, guys? What will be the entry? So bank charges, I know 25 has to come down. Okay. What about NSF check? What will be the JE for that? So you should be very, very adept at understanding what JE. So first JE I will pass is bank charges. Now this is typically under miscellaneous cost and I'll reduce my bank account. How much? It is 25. The first JE is passed. Second JE is NSF check. What will be the JE that I'll pass there? So there was a party who paid us. When he paid us, I've passed a journal entry which said I received cash from the party and I reduced the receivable. And I would have done 125 in my books. Then what did I do? I gave it to the bank and I asked bank to encash it. When our bank went to the debtor's bank to request the payment, they said that there's not enough money and the check was returned. Now, it's a crime, guys, by the way. If your check is returned without there being adequate money, then there's a criminal charge that goes against you. There's a huge, in India, I think all of us know about Rajpal Yadav, right? A big check bounced for him. So check bouncing is a big thing. Even the cost or the charges that are levied against you for a bounce check is very high. So now the bank has informed you that the money was not able to be collected because the check got returned with non-sufficient funds. What will you do? You will reverse this entry again. So what entry will you pass? You will bring back the debtors in your books and you will remove the bank or the cash from your books. So what you will do? Now you will pass this adjustment where you will do the second entry where you are, one second, where you will debit the party in your books and you will credit the bank account. How much? 125. So I'll pass these two journal entries in my books, and I will reduce the NSF check with 125. And what you get is the reconciled cash balance in your books. So it is 15,500 minus 25 minus 125, which is 15,350. Now, just to make sure that this account is tallying with the bank records, what will I do? I will start with the balance per books. How much is it? It is 12,850. Now, this is only for reconciling. We are not going to pass these entries in our books. Okay? This is only for reconciling. We will not pass this entry in our books. Just 1 second, Shikha. Let me complete this. So what is this? This is deposit in transit. So I know when I was a student, I used to do bank reconciliation like this. I somehow always feel this works for me. So this is bank balance. This is cash balance. Okay. So what did I do? I deposited. So this is cash. When I deposited, the cash has gone up. The bank is still less. Now we have to bring bank to cash. So I will add it. So I will add. I know these checks will have to go to bank. So I know these deposits in transit will be credited. So maybe it is going to take a little bit of time, but when these checks will be encashed and the bank will get the money. So I know that this will be added with 4,500. And I also know that I have given some checks to my parties, and these guys have not presented the check for payment yet. But in the next couple of days, when these checks would be presented for payment, they would come and they would demand it. So my bank will go further down. So when I take this becomes 12,850 plus 4,500 minus 2,000, which is 15,350. My question to you guys is, can you understand that on 31st of December, the figure and the audited figure which will go in the balance sheet is what? Can you tell me? In this example, what is the audited figure which will go to the balance sheet? Can anybody tell me? Audited figure that will go in the balance sheet. Yes? It is going to be 15,350 because these two entries I will pass in my books. And then I'll freeze it at 15,350. But can you see, even that day, when you look at the bank account, the statement in the bank will show you 12,850 because these two checks haven't been encashed yet. One hasn't been deposited, one haven't been encashed. So typically in a balance sheet, we will see this figure, and then we will look at the reconciliation to talk about these two figures. And then I will go and I'll check in the bank statement whether this plus had come in the bank in the next couple of days and this minus has actually been effected in the bank for the next couple of days. Shikha, unmute yourself.
Yes,
See,
ma'am.
what is a non-sufficient fund? That means party paid you, you gave it to the bank and the bank returned, right?
Okay.
Have you understood or not?
Party paid as in.
So the debtor paid us money, right? I had got this check and I gave it to the bank for crediting it. So I sold goods to you. You paid me in bank in check. I deposited your check to my bank. When my bank went to your bank said no, non-sufficient funds. The check bounced. Have you understood?
Right.
So that means what? It is a deposit that I would have made in my books.
Ma'am, but this NSF charge will be, why will it
Okay,
charge
this
to
is not
my
a
bank?
charge. This is a check.
Oh, this is a check. Okay.
Have you understood? This had it been a charge, it would have been a charges, right? You would just
Right.
debit the charges and credit back. But this is
Okay.
NSF check. That means you had received a check and that check was sent for the bank to deposit, but
Got
the
it,
check
huh? So
was
then,
returned saying non-sufficient funds. So the
got it.
party who paid you, you would have reduced it and debited bank. Now
Hmm.
you just
Hmm.
reverse it. Is that okay?
Got it. Yes, ma'am.
This is not charge.
Hmm.
See, this is what CPA exam will do. The amount is so less that you would be forced to treat it like a charge, right? So that's the trick that they play.
Right.
Okay. Is this clear to everybody? Anybody, any questions? What is coming to the back? See, this is very important that you understand this well because even when you do audit, this would be applied in audit. Earlier, they would just tell you the situation and they would ask you as an auditor, what would you do? What process would you do? So I would say, I will match my beginning bank balance I will look at the reconciliation items and I will see whether the deposit has actually happened in the next couple of days and the check was actually encashed in the next couple of days. But now they're not doing it. In audit also, they're starting from here. They're asking you to write the adjusting journal entries and then they are asking you the procedures. So this is very, very important. Okay? Is this clear to everybody? Anybody, any questions? Okay.